Good morning, everybody. Happy Friday. We're so excited you're here this morning, and we were just talking about the cool weather. I tried to do this call outside on my porch, and then blowers started going, so I pulled it back in. But I love this cooler temperature and hope that you all will get some time to be outside today too. Welcome to our workshop this morning. We have a great morning lined up, but I first wanted to just remind you that we have Share Latte next Thursday. In a few minutes, I'll pop the link in butbetter.com. We're so excited for Demi and her team to share about their new CSR they're going to be rolling out. So their new program. So if you haven't signed up for Share Latte for September, that's next Thursday. And like I said, I'll pop that link in just a few minutes. So this topic that we have this morning has been requested many times. As much as a lot of us don't love financials, it's really important. And so Robert and I began this conversation in the spring, and he's the managing director over at Attolero. They are super specific to supporting the nonprofit community. And personally, I don't do our financials at Share, but we have outsourced to Attolero. And from what I hear from Melissa and previously Amy, it has been a game changer and has been so nice for us to be able to not have to be encumbered with that part of our work and be able to focus on other things. So that's my personal, that Share Charlotte's personal cheerlead for what they do over at Attolero. But Robert has a great morning planned for us, and Alyssa with DigiBridge and Beth with Rebuilding Together are going to also be sharing throughout the morning. So without further ado, I'm going to actually toss it over to you, Robert. Thank you so much for being with us and for leading us through this workshop this morning.
Yeah, thanks for the introduction, Julie. We're really excited about this seminar. I'm also excited about the number of people that showed up on a Friday morning to talk about exciting things like financials. But, you know, we've got a nice group here. I appreciate all the survey responses as you registered, provide us good feedback on what we need to cover. The problem, of course, always is we've got a high disparate group of people. I think there are 18 different roles represented in the people that registered. And we've got a lot of topics to cover. But instead of just listening to a boring CPA talk about these things, we've brought in some of your peers to tell about, kind of give some anecdotal stories about things that they've come across that impacted the way they handle their financials and such. So with that being said, I'm going to share my screen, and we've got a deck that we're going to go through. And there's going to be a lot of words on this deck, but I want you guys to know that we will be really talking over it, and think of this deck as a referential piece that you can take away in the future to share. So everybody can see the deck now. We're good, Julie? Okay. So as Julie mentioned, Attolero focuses only on the nonprofit community. We focus on small and mid-sized nonprofits, and our missional intent is to serve those nonprofits, do this back-end accounting, 990 work, all those things they really don't like to do, and take that off their plate and give them meaningful reporting and feedback so they can have a better board presence. They can also have a better relationship with their donors, and that's where the fundraising and the financials are really tied together. So we've got, as Julie mentioned, we've got some guests here today, and I'll let them introduce themselves and tell a little bit about their organizations. And throughout this presentation, they're going to kind of jump in and provide some perspectives on the topics we cover. So Beth, you want to introduce yourself?
Sure. I'm Beth Morrison, Executive Director at Rebuilding Together of Greater Charlotte. If you don't know us, we're a home repair and community revitalization organization. We have a national presence, but we are locally our own 501c3. So it's an affiliation sort of organization. So we have some support from our national office, but we've really had to figure out a lot of things for ourselves. I've been in this position just over 3.5 years and came to it with just volunteer nonprofit experience. So this has all been kind of learning as you do it, and starting to work with Attolero to outsource some of our financial needs has been really helpful in taking a lot off my plate and helping to get us to the next level.
Great, thanks, Beth. Alyssa?
Good morning, everyone. My name is Alyssa Sharp. I'm the CEO of DigiBridge, and we are a STEM education nonprofit working to prepare students for the digital age. We founded in 2014. Our founder was David Jessup, for those of you that might remember David. He left the organization in 2019 when I stepped in. And our organization was built and founded here in Charlotte, starting with a single dollar. Now we have a budget size probably right around $700,000. And we're making a lot of changes with our financials right now, going from cash-based to accrual, preparing for an audit. So it's very important to have, a very good financial reporting structure and help with this whole process. So just excited to share more about our process, because we have been one of the small nonprofits going up to more of the mid-size range. So have some experience there. So.
Great, thanks, Alyssa. And to introduce myself again, Robert Bales. I'm a founder of Attolero. I didn't say it, but I am based in Charlotte. So Charlotte is a very important market for us. I'm one of those rare Charlotteans, if they exist. I'm one of those. So certainly very passionate about the Charlotte market and the nonprofits there. So with that being said, let's just launch into what we're going to cover here today. So the key topics is, first and foremost, why do you care about financials? They certainly are important to your board, but we'll talk about why that's important and what donors and everything are looking at there. We'll walk through the financial statements as well, and go through each piece of them. And as I mentioned, we have a kind of a disparate spread of expertise here. So we'll hit the major topics, or the major statements, and then we'll talk through those and provide some perspective on what each one means and what are the important areas you should be concerned with on each of those financial statements. We'll talk through board involvement. How do you make sure your board understands financially your needs, which is one of the most important conversations, besides making sure your donors know what your board means. Spend some time on 990s. Lots of times people see that as a check the box compliance exercise, but that is an opportunity to tell the world about your mission and make sure that you guys are doing that and not really just lobbing that process over to a CPA or whoever's preparing your 990. Make sure that you have an active role in the narrative that goes on it. Alyssa referenced, they're getting ready for their first audit. We'll talk about attest engagements, when audits are necessary, and maybe when they're not. Lots of times you will apply for a grant or something and it'll say we must have audited statements. Is that always true? Yes or no? But we'll talk about situations there. And then lastly, if you want to have great financials and that tell a great story, you've got to have underlying financial processes that align and get those things done on a timely basis in an accurate manner. And just what are the key things you should be concerned about in doing that? So that's our topic list. This is the first time I've done one of these webinars. I understand it's a very informal thing. As we go through the presentation, what I will try to do is make sure I pause between each of these topical areas. And if there's questions, make sure you're posting those on site, and then Julie or one of the Share Charlotte team can tell us the questions, and we can answer those as we go through instead of waiting to the end. But we will try to hit it each time we transition from one of these topics, have a small time for questions there. All right, so now, as I mentioned, we've got a big wide group of people, so we thought it'd be great to put you guys up into some breakout groups. You can identify who you are, why you're here, and really what you're hoping to gain from this workshop, and maybe make a connection or two as well. Okay, great. I hope that was productive, and hope you get a chance to meet some of your peers and make some connections and get an understanding of the types of people represented here today. Okay, so we'll go to, where we talked about first is what we're all here for, why financials are important, and how does that impact fundraising. I read a study. I do lots of reading, of course, in nonprofits, and this was in the Next Generation of American Giving, kind of a fundraising type publication. And they said what donors are looking for in nonprofits, two things they list are financial efficiency and impact of their donation. So, everyone out there as a nonprofit can see your financials, and they want to make sure they're in order. They want to see that they're filed timely, and they want to make sure they can understand how their donation, where their monies are going. So that certainly drives a lot of, from a fundraising standpoint, because it's the validation point, right? Secondly, we've got to live up to the donor expectations. Whatever your program may be, whatever the cause is you're serving, they have to see those funds being deployed in a manner. And that's something that, what we try to do is be very disciplined in making sure the financials tell that story, that you can clearly see that most of the spending is going to the program level. And we'll talk about later in this the difference between program, M&G, and fundraising and all that. But we've got to make sure that those financials tell the story to those donors, whether it be an individual or a company. And lastly, it's kind of one of those barometers of the organization, right? If your financials don't look good, or they're not getting done timely, or they have questions, that probably says the same about other areas of your organization. So by being able to present clean financials that are understandable, it gets everyone aligned, the group, the board, your donors, everyone. So we really think, and the reason for our existence is to help nonprofits be able to have these financials in place so they can fundraise and do that effectively. Beth, Alyssa, I think you guys have an example or two about where you may have, where having good financials in hand really enhanced your ability to raise funds.
Yeah, and I think do you want to share your screen again? It went away.
I'm not sharing my screen again. I'm sorry. I did not realize that I had to do that, guys.
Okay. Yeah, so I was just reflecting. We were just invited to apply for a United Way grant, and they're very strict on kind of the financial certification. And if you don't have everything you need, then you might have to get a what's it called? We were just talking about it, fiscal agent. So kind of being able to respond back and say, I have this and this and this. These are the financial documents I have. This is our plan for getting our first audit. This is when it'll be available. That kind of helped us still be able to be considered for that grant without a fiscal agent, because we could respond back very quickly with the advice of our CPA and auditor on, what we should provide to them. So that kind of helped us, I think, establish that trust, even though we don't yet have a full audit. And I think that comes in really handy when you have the more foundation type grants, where they're going to require everything to be in order for your financials, or you won't be considered.
I have a couple of examples. Oh, do you want to?
Oh, I was just going to say, and Beth, I think one of the most important things is speed, right? And when they ask you financials, if you can turn that around and present it right away instead of, well, I'll get back to you in a few days. I think there was a lot of value there in that one too. Sorry.
I was going to add that recently we've been approached by 2 different family foundations, and the first thing that they've asked is, hey, we've heard really great things about your work. We want to learn more about it. Can you send us these parts of your financial package? And so just having them on hand to be able to quickly reply and have that all gathered shows legitimacy, and it shows that we're pretty organized and making a good investment in. And then secondly, last year, you all may remember when all the CARES Act funding came out through United Way and the Arts and Science Council. There was a lot of reporting that needed to take place in terms of financials to be able to show what your actuals to budget were, so that you could show any sort of deficit in your commitments, as well as receipts and expenses. You had to show specific expenses that were reimbursable under CARES Act funding. So I wasn't in a pile of paperwork trying to figure out where I bought that computer and where that receipt was and where I had allocated that expense to. Everything was very organized so that it took me maybe 6 hours to pull it together instead of 72 hours, which that was the length of the entire time that you could apply. So it just makes a lot of sense to have it all tidied up as much as possible, so that you're aware of where things are and you can share this with other people.
That's great examples. Thanks for sharing those, guys. So as we move forward, I just wanted to pause here. Was there any questions that have come in or any topics someone had before we move forward? Okay. We'll get into the fun stuff and going into financial statements and things like that. Now it gets really exciting, guys. But I wanted to just walk through the basic financials that you're going to use and share with any of your stakeholders. And first, this is a question we get a lot from customers is, cash, should I be in a cash or accrual? So I want to talk about that, and then we'll spend some time in each one of those statements and really what the important elements of those are. So first off, cash and accrual. So at a high level, cash means you're keeping your books like a checkbook. As expenses come in, you're coding those. At the end of the month, I have this much cash on hand, and then I can go back and categorize those based on what I spent. Who's using that? Usually it's the newer nonprofits or smaller nonprofits. I'm not sure this 100,000 in revenue is completely accurate. We have nonprofits that use cash bases that are much bigger than this. When we take customers on, we do try to migrate to accrual because that's the way we work, and we think that's the way the book should be kept. And usually the reason it's not is because the nonprofit doesn't have the time or the know-how to do it on an accrual basis. But other kind of criteria or characteristics of cash basis is they usually don't have paid staff. They might not have a set program yet. And again, they don't have accounting staff or professionals that can track that. So accrual method is really if you are having an attestation engagement, a review, audit, or whatever, you have to be on accrual basis because that's generally accepted accounting principles. So usually the characteristics of those is, of course, you've got significant amounts of funding and funding sources. You're receiving grants, which is really important in a grant situation, in most situations. You have paid staff. You also want to make sure that there's full transparency of what's going on, because the cash basis can kind of hide maybe liabilities out there and things like that, and doesn't give the clearest picture of what the real financial situation is. And then lastly, as I said, if you're having any kind of audit or you have any kind of requirement for that, accrual basis would have to be the path you have to go down. Now, I want to revisit this 100,000 in revenue here. That's really there's not a rule there. It's just as your group grows and as you're emerging, there will be a natural segue where you will need to move from cash to accrual. Nothing wrong with cash, but there will be a hurdle when you'll move forward from that. All right, so let's run through the statements. As I said, there's a lot of words on this slide. We're not going to read the slide. We're not going to do it, but think of this as referential material you can take away and use in the future. But your statement of financial position or balance sheet that they call in the private sector would basically is a snapshot of the financial strength of your organization. So someone can go there and say, okay, at this point in time, they had this much cash. And if you're on an accrual basis, they have these liabilities out there. Now, even if you're on a cash basis and you have, let's say you have a loan like an EIDL loan or something like that, that's still going to show on the balance sheet. So it's not like you're going to hide that if you're not on a cash basis, but it's more things like accrued expenses and things like that aren't going to show up there. So the balance sheet's giving two things. One is telling the story again of the cash on hand. What are the assets at play? But really, what's really important down here is what in a private sector would be the equity section. But for nonprofits, it's what are your net assets? And so what this tells is there's two characteristics, really. There's three. There's unrestricted, temporary restricted, and permanently restricted. We'll go into that and what those mean in a second. But basically, at a high level, when somebody looks at the financials, they know what your unencumbered assets are. Those are the ones without restrictions. So they can very quickly say, okay, this group here has $330,000 of net assets on hand. And we know if we look at their statement of activities, their operating costs are $100,000 a year. So they have three years of operations on hand. That's a real healthy position to be in. Not many of us are probably, but that's just an example of the way people would use that. Obviously, the donor restrictions, it's great to have those because it shows you can serve your program going forward in some manner. But it's obviously it's a rung down in flexibility, right? Because somebody else is telling you exactly how this money should be spent. So those are the things really to concentrate on the financial position. One is, what's the cash on hand? And then down below the line of items, they're really looking at what your net asset position is and what that allocation is between those with restrictions and without restrictions. So when you think about, I just want to throw that. Hey,
I just thought maybe we would pause for just a second before we get too far away. Yeah. Shay, do you want to take yourself off mute and ask your question, just so we have a voice other than my own?
Good morning, everyone. My question, Robert, was how difficult is it to transition from cash basis to accrual basis? Is it as simple as just changing your method?
There's some work involved. And if Alyssa, would you mind at least talking through your experience as you're doing that right now? It's very relevant, I think, to hear it from you.
Yeah, so I think there's definitely some work involved. It has been a lift that I've shared with my finance committee. And we use Attolero for our bookkeeping services, and they have been phenomenal in training to understand how the money flows now. We have a large number of restricted grants, so we have to figure that out and set it all up so that it makes sense on our end, as well as how we're managing it with Robert and his team. So I would say, it is a little bit of work, but it's worth it because you get a much more accurate view as to where your money's going and what liabilities you have. So it's been worth it so far.
Okay. Yeah. I thought it'd be good for you to give that answer before I give my answer, because again, you're closer in the same seat. I want to hear how much trouble it was in your book, and I'm glad to hear you say it wasn't, because we kind of did the heavy lifting there. And so you would work basically with your accountant, whoever that may be, and make the transition. It's really not that complex, but usually it's best done at a year end. So when you decide to make that movement, you would be at the end of your year and say, okay, at this point in time, we need to reassess our balance sheet on an accrual basis. And what that's required to do is, let's say you have donations that have been pledged or contributions pledged that haven't been received. So you would have to record pledges receivable for that and make a list of those things. And then on the other side of the fence, you'd have to look and say, hey, are there things I owe that I have not paid yet? Did I use a contractor? Did I use whatever it may be? And then you'd have to do an accrual for those things. So it's doing that one-time assessment and then making journal entries to reflect those. And then you just have to have a process going forward every month end to make sure you square up those things. So not a tough process. And again, if you have that conversation with your accountant or treasurer, whoever it may be, certainly it's something that any accounting professional can manage and do the transition.
Thank you.
Does that help?
It does. Thank you.
Yeah, great. Thanks for the question. So this is really something that's really important on the balance sheet. And this is something that some nonprofits do a fantastic job of and some don't. And it's a really important area, because people give you money in three buckets. Some people give you money and say, hey, I love what you're doing. I love your cause. Just go spend it. And that's what we all want, right? We want that free money to spend in the way that's aligned to our mission, but has the least amount of restrictions. So that's the unrestricted, of course. So then temporary restricted, comes into play where they may say, okay, I'm going to give you this money, but it's going to be for this purpose. And to pick on Alyssa here, it may be, I only want to make sure you serve this location for your program, or I want to make sure I only want to buy robotics kits, or whatever the case may be for delivering that. So they're telling you the way they want those fundings used for a purpose. The other way they do it is a time bound, where they might say, I'm going to give you X amount of money, but it has to be consumed over this period. So you can't consume it faster than that period, and you can't consume it slow. You want to make sure that you're spending the money within the time frame they give you. And then the last is really, if you have endowments, this is something that not all nonprofits have or are blessed with, but basically a permanently restricted is where they put an endowment in place. And usually in that situation, the endowment is you're using the earnings of that endowment that flow into become unrestricted funds, but it depends on how the endowment is set up. So it's really important, on your balance sheet that you're tracking these things. And the hardest part, and this is Alyssa referred to this a little bit, and I'll get her to talk a little bit more about this, is when you have clearly defined temporarily restricted things that people say you have to use it. So then you have to then release those temporary restrictions and show those on your financials so that they're flowing through to your program, and you're deploying those in the way that the restriction provides. So Alyssa, you want to talk a little bit about what you guys are doing there and how that's being managed?
Yeah, sure. So as I mentioned, we do have probably, I think, 4 at this point restricted grants in some capacity, of all of which Robert mentioned. I think the biggest thing is when we switch from cash to accrual, we recognize the fact that some of the grants that we were treating as unrestricted were actually restricted. So we had to do some reclassification and changing. But a lot of our restricted grants actually require periodic reporting to show where we've spent the money, what remains in order for us to get the next payment of the following year. So it's really important that we have tight operations policies on how we're keeping track of it. So we have it all flowing through correctly now, thanks to Robert and his team, on our balance sheet and our income statement. And we work internally to be able to determine which expenses for the month go to which expense line or which restricted fund account. And those might be things under cost of goods sold or wages, parts of salaries, rent. We have a restricted grant for our programming space. So we just have everything that you've mentioned going on. And so we've really tried to figure out ways to keep really good track of it so that we know what we're actually spending and what we have left in specific budgets of the restricted grant.
And, to list a point is, how do you know if it's restricted? That's always a question. And really, if you're provided any kind of document with that payment or with that pledge that says you're going to do this with this money, then there's a restriction in place. All right, so that's what you have to keep in mind. You see it in if there's no evidence of that when you receive the funds or any pledge, then it's unrestricted. But if there's any kind of condition that's precedent on those funds coming into you, then you've got a restriction that you need to track and monitor.
And just to jump in there, we often have grants that are percentage restricted. So they'll say you have to spend this % on direct building materials, and you can only spend up to this % on operational costs. So that gets tricky too.
Yeah, and it does. And then it's the feedback cycle. So once you go to renew that grant, if it's renewal, they want to see the evidence that spend is hit that way. And so you've got to be able to show, yes, we took this percentage of this project manager in best case, or this percentage of materials, and this is the way we spend it. Any questions on restricted or unrestricted? That's a nice, fun area.
Hey, Robert, I had a question that might be rumoring around in the group, and it doesn't recount to this, but, and maybe you'll address this later, but just how expensive is it to hire someone like you? You know, I think for maybe a lot of us, this all might be fairly new. And so, like, what is the investment to move forward with hiring someone like you to help manage this kind of chaos?
Well, there's lots of models, or lots of models is the wrong word, but there's lots of ways we engage with our customers. The first thing I say is probably not as expensive as you would think, but it really depends on the size of the organization, right? And when a customer comes to us, we look at the primary criteria we look at is the number of transactions that are processed. If you're fully outsourcing to us, we have to understand the transaction flow and volumes and all that, because that takes time. And then, you know, we also have to understand the number of people you have on your in your crew, right? How big is the staff? Because that drives not only interactions, but it also drives complexity, right? The more people you're dealing with. So two quote, we ask transactions, we ask people, and then we'll come up with a quote based on the situation. And then the level that we actually outsource, like some people come to us and say, hey, take it, do it all. And that's great. We can do that model. When I say do it all, that is bookkeeping, payroll, financial statement preparation, and 990s. So a complete one solution, monthly fee to do all those things. And then we have some customers that say, hey, we've got an in-house accountant, but we really would like to have, you know, what we call our fractional treasurer, right? Somebody that comes in once a month, they review the books, they prepare board reports, they help us with budgeting. So there's that model as well as another level of engagement. So to give you an absolute price is kind of hard.
Understood. Well, and I think I can echo.
Range.
Yeah.
And I would say, you know, most of our customers are paying us anywhere from $200 or below a month up to, you know, 1,000 or so, where it's kind of in the range.
I can share that we went through an RFP process, gosh, a few months ago in the spring to get quotes for outsourced accounting. We were using a previous firm, and they range from what Robert said, $200 a month to $2,000 a month. So I'm also happy to share more about our RFP process later on, but it is more affordable than you think, especially if you find a team like Attolero.
Yes.
You're too nice.
Agreed. Yes.
Actually, I think we've got another question. If we're at a good pausing place here, Jackie, do you want to ask your question for Robert with Charlotte Angels?
Sure. I was just trying to determine what type of document, or where do you keep up with the restrictions that you have? So I think Alyssa, she also told us that she had a spreadsheet that she uses, but just your perspective as well, like how do you keep up with, okay, this is restricted, and this is going to has to be used by a certain time. So just a place to put that.
Yeah, I'm sure there may be tools out there that are specific to that, but we found the most effective way is just basically to start with have a spreadsheet. You know, when we have customers in this situation, we ask for two things. One is we want to have a repository where we can see all the grants, so we can see the conditions and all that, and then we can work with them to build out a spreadsheet that basically lays out, okay, here are my grants, here are the things I have to do with that. And then you take in the columns, if it's time bound, which most of them are in some sense, because you want to tie back the budget anyway, and then you're spreading out that grant over that time period. So each month, you know, you're tracking to that, how the grant is being spent. So, you know, it's not a fancy, you know, kind of cloud-based package or anything, but basically a spreadsheet is the best way that we found to aggregate and track all this information. And then on your financial, and I'm sorry, Jackie, to interrupt, then on your financials themselves, you can kind of get as granular as you want. Some of our customers choose to just show a lump sum for restricted funds, and then some choose to actually delineate by fund what they see in their balance sheet. And that's kind of a board preference or an agency preference.
Okay, thanks so much.
Yeah, no problem. Thanks for the question.
Okay, we got one more. Sorry. Liana, with the exposure project, do you want to ask yours?
Yeah, sure. So, Robert, I know you were talking about with outsourcing services with you that it's based on transactions as well as number of staff. Is there a certain revenue that should be obtained before outsourcing services? For example, what if we don't have staff just yet, but we do have, a certain stream of revenue coming in? Like, at what point should we kind of look into services?
Well, it's a good question, and it's partially driven by the internal staff capability and how much time that's taking, right? So what we like to think that our service is doing is enabling the executive director, for small groups, if the executive director is carrying 100% of the burden, then and they approach us, then we say to them, okay, let's think about this. If you're spending 8 hours a month on bookkeeping and you could redeploy that to fundraising, how much more impactful would that make your organization? Or if you could redeploy that 8 hours to program, how much would that affect your organization? And usually if you start doing that math, you could want to outsource it very early on, right? Because if you can spend more time on fundraising, and then you also have great financials to provide them, then it's that. So it's hard to put really an absolute dollar amount where you start that, but it's more about how much time, to me, it's taking from the internal staff to do it, if they could be redeployed to do other things better. We have customers that are smaller than 100,000, and we have customers that are over $1 million. It just depends on an annual budget. It just depends on really their staff capabilities and how much time it's taken for them. Does that help?
Yeah, it does.
Yeah.
Thank you.
Okay. So it gets, in summary, if financial processing and bookkeeping are a distraction, then I would have a conversation with the board about how more impactful you could be if somebody else was doing that for you. Okay. But thanks for the question.
No problem.
Okay, we got one more. Sorry. Eileen, do you want to ask your question? Then we're moving on, Robert. I promise.
Oh, that's fine.
I'm sorry.
We're here for questions, so I love it.
So what about what I would maybe call project-based services? So I think that kind of day-to-day is going, but now we're adding employees or doing something different, maybe a review of the 990. Do you come in and offer that kind of work as well?
Yeah, so we're helping a group right now with two things. One, they're trying to assess whether they have to bring unpaid staff, and they're trying to determine, do we set up payroll or do we pay them as contractors? So they ask us to help them with that process. So, I'm not sure what route we're going with them yet, but we'll work with them. But they go the contractor route, we'll help equip them with independent contractor contracts and a process for getting all that information, getting W-9s, getting them paid. If you go the payroll route, we'll go in and set up the payroll for them and let them run it. And assuming when that's done, they can run it themselves, right? So those are just two. So we do that. The other things that we do a fair amount of is the CEO. I'm a former CFO. I didn't tell that. So the CFO side of what we do is a lot of financial modeling and things like that. So sometimes we get projects to do that. We do 990s standalone as well. So we have some customers that we do 990s for. And then the really hot button this year, and someone mentioned the CARES Act, I can't remember who was early in the call, is like ERT, employee retention tax credit type work, and PPP type work. And we've done a ton of that this year.
Excellent. Thank you.
Mm-hmm. All right, so we'll get back into the exciting financials, right? So after the statement of financial position, the next thing that people are going to look at is really statement of activities. How are you spending your money? And you want to make sure that, you know, your program and what you're doing comes out in those financials. You know, it's so or in the statement of activities, it's so easy to say you're setting up your books and you just get some nondescript chart of accounts and say, okay, well, it's got travel, it's got contractor expense, it's got those things. But really, you want to make sure your chart of accounts is customized to show what you're doing. All right. And it's really important when you think about nonprofits, because not only do they want to see, you know, how the money's being spent, they want to see that allocation between program, management in general, and fundraising. And then that's going to follow itself all the way through to your 990. So whether a person's looking at your financials, you provide them or not, they're always going to have access to that 990. And you want to make sure that those two things are accurately represent what your program is and how it goes. But the other thing we just talked about, unrestricted and temporary restricted, is your P&L needs to show that as well. Interested parties, stakeholders want to see how this temporary restricted and unrestricted money is moving through your account. So this is an example here that just shows the major components of the statement of activities. Of course, your support areas, what's contribution, what's your program, all that. And then also summary expense, and then, okay, which of this is unrestricted, which is temporary, and which is permanent. Not all systems accommodate this kind of presentation style. Most of you guys probably use QuickBooks Online. We do a lot of QuickBooks Online for most of our customers. And you have to do some things in QuickBooks to get this, and it doesn't really have this view, but still you want to be able to see this activity, whether this is actually the way the report looks or not. So that's the statement number 2 that needs to be in your board package and in any kind of external you send out. So first one being statement of financial position, second statement of activities. Again, this is really showing inflows and outflows of your cash. I've talked about this a little bit, and this is different from just a statement of activity, but it's a statement of functional expense. So this is where a person can come in and see at a account level how you are spending these funds. If you have multiple programs, to be able to allocate it to those program areas, and then see on the level, okay, what did we spend on rent for this program area? What do we spend on supplies, things like that in the program? And then also to be able to have the supporting activities. So you can see a cross section of management and general fundraising there where that is. This is one of the things that when a lot of our customers come to us, they don't spend a lot of time in this view. And we encourage them to use this as a standard part of your board report, most importantly, because this is the view that goes in your 990. And this is the view that most of the world is going to see. So if that's the case, then it's important to us that every month when we're closing the books, we want to see a preview of what that's going to look like. We want to make sure the financial statements are ready. They're presented on a monthly basis with this allocation and how those things are going. Now, based on the size of the organization, sometimes it's better to wait until the end of the year to do the allocation, or maybe the way you have to track time. But wherever possible, we like to make sure that the statements reflect the program, M&G, and functional expense areas on a monthly basis.
Okay, Robert, we got a question. Kenneth. I love the little hand up. Do you want to take yourself off mute and ask?
Is my video up? I don't see myself.
We see you.
There I go. Let me get the video myself. Hi, Robert. My name is Kenny Robinson, and I have a nonprofit, Freedom Fighting Missionaries, where we serve the formerly incarcerated and those who have or criminal justice involved with a disability. So it's a very vulnerable population that we serve. And it's a population that just doesn't receive a lot of resources and funding for the reasons that we can all just imagine. So with our effort, we have been able to, without any government support or big support from any big foundations, to raise and spend between July of 2020 and July of 2021 over 300,000. So this year I have to file 990s, right? I have 3 paid staff, but all of these projections and things that you're showing looks like it's in a different language to me, right? Because I've never had to look at this, right?
Yeah.
This doesn't, you cannot project that you're going to raise that kind of money when you're starting out new, right? So none of these things didn't matter then, they do now. But one of the things that we're faced with in a grassroots organization, especially when you're, Black owned and Black led, is that we can't afford to hire you, right? And I know these things are needed, but they have a cost to them that I just can't afford it, right? And then not being able to afford it causes me as the executive director to be trying to watch YouTube videos and figure these things out with the client in the car with me, right? And one on the phone on the other end. So my question is, what do smaller nonprofits like myself do to access companies like yours without coming there pretty much begging for free services?
Well, first of all, congratulations on what you've accomplished. I love the cause you're serving, and the fact that you've raised so much fund. You're doing a heck of a job. So congratulations. Secondly, I wouldn't jump to the conclusion that you can't afford our services. So, I'd invite you to at least initiate a conversation and see what the possibilities may be. But it may be that what you need more than anything else is just someone to come in and get the house in order, and then we can show you how to take care of it going forward, which we do with a lot of customers as well.
Okay, thank you so much, because this the understanding that for us, it is the fear of being told no, because we get told no so much, right? And the fear of being perceived as a beggar coming there asking questions and ain't, prepared to pay right now.
No, I totally understand. And our focus again is 100% on nonprofits, and there's no shame and no expectation on our side of that. So we'd invite the conversation.
Thank you.
Kenny, I'd also say, lean on other nonprofit leaders too. Like, I would be more than happy to chat with you about what I know. I know it's not official, accountant level work, but a lot of what I've learned has been from other leaders. So I'll make sure you take down our information so that you can connect with us after and share what we know, or help you with any of the best practices we've learned too.
Thank you, because a lot of us are only on this call now because of Share's aggressive marketing to try to reach the grassroots organizations. Otherwise, we wouldn't be here, right? So it's only because of internet marketing, Instagram marketing, Facebook marketing, and direct emailing to us that we know that these calls are happening. We know that Robert now even exists, right? And that's very important for us. So we all would like to connect with the people who that we need to be connected with. So thank you.
Yeah, that's where plug for Share Charlotte. They're doing a great job in the nonprofit communities, and really we appreciate being a partner with them for all those reasons.
Can I share one more thing? Sorry. Kenny, I don't know what your board structure looks like, but we have a retired banker on our board that has helped kickstart a lot of ours, and it's all volunteer based. So there could be some opportunities there for some skill-based volunteering, or a board member that could help as well.
Thank you. And again, for us, all of those things is the better served from our experience by networking, right? They'll answer your call, Alyssa, faster than mine, and they'll take you a lot more serious faster than they would me. So that's the kind of help that we need. Like, we need people, with a certain voice to get on the phone and make that call and connection for us.
Absolutely.
Yeah, well, thanks for sharing that with us. spend a little bit of time on this functional expense area, because to the question just raised, not everyone knows what this means, or what the functional areas mean, and some of us, a lot of people will do as well. But first of all, program service. It's if it's serving people you're trying to rehabilitate into the community, like his was. So what do your expenses look like, and if there's revenues associated with those services, what are the revenues to do those programs? Then of course the other category is, okay, what's it take to operate your business? What's what's the amount you have to pay for phone service, all those kind of things. And then lastly is, what is the money you're spending on fundraising? Being able to specifically say, okay, I've spent this much this year on either an email service, whether it be solicitation type folks that go out and fundraise for you, being able to categorize it that way. And the hard part about this is sometimes you have expenses that don't fit in these buckets cleanly, and that's where you need to then do an allocation. For example, payroll. If you're a one-man show, your payroll, you're doing all these things all the time. So you need to figure out and track, okay, how much of my time went to program, how much of it went to imaging, and then fundraising. And there's lots of ways to do that. For time, it's very easy in that you can just say, okay, 40 hours a week, I spent 20 hours running my program, 10 hours doing that. And so you've got your allocation there. When it comes to things like overhead related, like payroll, rent, things like that, there's a lot of different things you can do. Some we just allocated a time study because it makes the most sense. Where your time goes is where your overhead should be allocated. And then based on it could be done on a square footage. If you're storing lots of things, maybe it makes more sense that the program is paying a higher percentage than the time, because 90% of your rent is storage. So you just have to have those things in line. And again, why that's important is because when your end user, when your stakeholder, your financials look at it, you want to make sure that the highest percentage possible is aligned to program. That's why you exist. That's what your cause is there for. So you've got to make sure that you're showing and representing your spend is focused on that program. I pulled a couple of sources about what they say, because this is always a question. What should those percentages be? Well, they need to be what they are, first and foremost. Want to make sure we're doing it accurately and that. But Charity Navigator kind of has ranges, and that's why these don't add up to 100. But they're saying that program expenses should be 85%. We don't see that from our customers typically. Most of our customers' program expenses are somewhere between 70 and 80%. And then the fundraising and imaging or admin expenses are somewhere in this 10 to 15% range. And it may jump around based on, again, how the organization functions. If you do a lot of fundraising, you do a lot of donor-based, individual, consumer contributing, you might see that fundraising expense much higher than M&G, and then vice versa. If you're much more of you have an organization that has lots of grants, you're going to have a little more overhead because you've got to pay for audits, and you've got to pay for a higher level of insurance coverage and things like that. The M&G expenses may be a little bit higher. The other source was just Better Business Bureau, and it's just high level about what they're saying. And I didn't really even like using that, but it was the only representative external data I could find on that. But at the end of the day, it needs to be what it is. And then we just got to have a process in place so that we can define and report on these three levels, because it's very important how people perceive your organization. All right.
I'll just jump in right there and say there's, like what you've been saying, there's some that you might think are admin, but if it's essential for you to deliver your programming, like workers' compensation is one of our biggest expenses. And because we're in the construction industry, it's especially expensive, but we have to have that in order to do our programming. So I think there are things like that could be kind of misidentified, that you really are spending more on programming than you might think.
Yeah, and it's really important because I just named simple things, payroll, rent, and all, but there are many other things like some groups as well are part of national organizations. Beth, you're part of a national organization as well, where there's dues payments and things like that. You know, there's a program side of that, and you have to make sure that that's reflected. But insurance is a really important one because I would say that most of the customers, when we come in and take over, they've never done that allocation, right? And so you look at their 990 and you say, wow, they're carrying a 30% M&G, but it's really not real. It's just not, they're not showing it right in the right manner. Okay, the last financial statement that is important to outsiders, and this is only for accrual base, because if you're not an accrual base, then you can really get this from your statement of activities. But basically, it's a statement of cash flows. And all this is doing is it's saying, okay, if this group started with this amount of cash and they ended with this amount of cash, where did that cash go? And so they're looking at their balance sheet and it says, okay, I see that they collected a receivable, came in the door. We saw they brought in some other receivables. At the same time, they had to go out and they had to purchase some equipment. They brought in some investments for whatever the case may be there. But basically, it can tell them, okay, what cash was provided by operating activities? You know, what did we get by running our business? And then what did we use in non-operating areas? So it's a very important measure of where the cash is going. So again, this is something only for accrual based, and not a lot of nonprofits use this in their board reporting and things like that. But if you are audited, if you have grant requirements, this is going to be a standard statement that's part of that as well. Okay. So
there's a question too from Jackie.
Okay, Jackie,
Yeah, it was based on, I think it was Melissa, I think, who was talking about the workers' comp being something that is necessary for their programs. So if you pay things, and I just use storage as an example, but if you pay storage specifically to house things that are for programs, can you expense that as 100% for programs, or do you have to break that down by, typically what we've done is have like a 20-80 program split, but as you're saying, there are some things that are probably more that we could expense as specifically to run programs. I'm just trying to figure out if those things are that way, you can expense them 100% for programs.
Yes, if you are, an expense is one, you know, if it's storage and the storage is 100% for whatever you need to deliver your programs, then that should be a program expense. There really shouldn't be an allocation off of that.
Okay.
If you have an office and you know there's more than just program going on in that office, which normally is the case, there's those components, that's when you'd want to allocate the expense. And in best example in the insurance, you know, typically there's 3 kind of insurances you may have, right? You've got your umbrella coverage for whatever you're trying to cover that, and there's there should be an allocation of that because part of that is covering program, right? You probably have board directors liability type insurance, and that's really going to be M&G. And then like workers' comp is another insurance you all have. Now that should be aligned to payroll, because if you're allocating payroll, you should be allocating your workers' comp expense as well.
And then if you have expenses like insurance for events, then that would be 100%. Could that be 100% programs as well?
If it's event centric, unless it's a fundraising event, right? And then you call it a fundraising expense.
Right. Okay. Right.
Yeah. And then some of our customers have events that are both. So then you'd have to get into some kind of allocation.
Okay.
Or you know, fundraising event and also a program event. like an example would be like a 5K, right? If you have a program that trains for a 5K and then also you raise funds there, you'd allocate based on that. Okay, so just in summary, is getting out of the financial reporting areas. If you take away nothing else from this, make sure you recognize these three things. One is it's very important to track restricted and unrestricted funds. And that's important because you've got to keep your grantors happy, but then you also want to make sure the public clearly understands your unrestricted funds and what it takes to run your business and how you're deploying those funds. The second thing is, when I say revenue model, it's what your nonprofit is doing. Make sure that your financials clearly show what you're doing, so that when you're meeting with your board, when you're meeting with experts, they can clearly understand what's going on there. And then lastly, and this is the thing to your question, Jackie, is for the program cost, make sure that that is accurately done, and it's done as often and as accurate as possible. Because the last thing you want to do is have someone look at your financials and see that management in general was 35% of your spend, and that's outside of their acceptable range. You want to make sure it's accurate, it's reported, and they don't really have to kind of scratch their head and say, okay, what's going on here, right? Make sure that that's clear. So if we're doing these three things, and our financials be in a much better shape for anything we want to use them for, fundraising, reporting, whatever it may be. All right.
Hey,
so
Robert.
now,
Hey, Robert, sorry, I think Kim raised her hand. I don't know if Kim, if you have a question.
Thank you. Thank you, I did. Robert, being able to do this in a clear fashion is sometimes what we struggle with. And the reason being is we've got a lot of programs and a lot of different restricted monies and we can share the information in the format that, and we do share that format with our finance committee. But when we get to our broader audiences like donors or even our board, who may not have the financial training to go through all those levels, will you be sharing with us maybe a little later on a format that makes this easier to digest when you're not, because our financials every month, that just, it's hard.
Yeah, well, there's the challenge there is a challenge. It's a great question, and the challenge here is there's two things with financials. You want them to be concise, but then they've got to be granular to the right level of the group. So when we have customers like you're describing, where there's multiple programs, maybe the answer is, here's our summary financial statements, and here you can see what went to program. And of this, and here below is a pie chart of the expenses on a program level. So at least there's some visibility into the programs and then how that allocation is running through, without getting into the gory details, because sometimes that's more than people want to see. So we do that with a lot of our customers. That is not something we were going to dig into in this later. So let's talk about it now. But that's one thing that I've seen, if I understand what your complexity is, that has been very successful, is being able to show high level program level spend in that kind of manner.
Right. We want to make sure that we're communicating with them so that they do understand, because it does get really difficult when people see, like, okay, there's money there, but it's like, that's restricted money and it can't go into these other programs, and then having our board being able to fundraise for it because they passionately believe that this program needs that money. I mean, it's really important for us to be able to communicate that well. And I think we struggle with that just because of the complexity of it all.
Yeah, so I think one of the concerns, if I'm hearing this right, is you may have sizable restricted grants, but that doesn't mean you still don't need money. Is that what the issue? Yeah. So part of the story there is to make sure that there's an appreciation for the operating needs of the program, and how if you can isolate what percentage of that is covered by restricted funds in the upcoming year, then you can not only say, we need this to operate, and the restricted funds are going to cover 15% of this. So this is our exposure for the next 12 months. So it's almost like some forward-looking thing that I've seen some of our customers will use when they're having this kind of discussions. Okay. Well, that's a great question, though, and it's one of the struggles. There's definitely some art involved to the way you pull us together and market it for fundraising purposes. We think that accounting is all science, but there is art. All right, so we're kind of transitioning a little bit to some other areas, and this is a fundraising and financials and fundraising, but the board plays a crucial role in all this. Having a good board is so important for a nonprofit. So, I'd encourage you guys to make sure you've got board members in place that are passionate, that are participating. I know that's hard to do. Using Share Charlotte as a vehicle to that, I think, is good, because I think you can solicit and find boards through them and maybe through others. But for most small nonprofits, the board members are your primary fundraisers. And so you've got to make sure you've equipped them and engaged them in the nonprofit and the mission. So, I've got a kind of a laundry list of how do you make sure your board is involved. And there's a step I really don't have here in front of this, but just to talk about up front is, you've got to make sure that you've got the right board members on the bus, and to make sure there's mission alignment, which is important, but mission alignment does nothing for you if you're not a priority to them and you're not getting their contribution. So it's twofold. The reason I founded Attolero was I served on a lot of boards, and one of the common things I saw on boards was in some manner the lack of board engagement, and the other side was the lack of the ability to produce timely and accurate financial statements. So I was like, wow, if through Attolero we can do two things. One is we can empower the nonprofit to provide timely, accurate, and inexpensive financial statements, and two, they can use that information to equip their board to run that, then we've all won. And so that's really, really important. So, in this section, I just wanted to walk through, how do you make sure your board's involved? One is just communication. It's got to be a cadence that they expect. You make sure you've got a laid out there of when and how you do that. There are state level requirements about board meetings, so make sure you're adhering to those. I think normally that's not an issue, but there are some states that are more reclusive than most. North Carolina's not one of those. The other thing is make sure you've got compensation plans in place, and that the executives understand those compensation plans, that you benchmark those compensation plans for the staff and executive directors. The benchmarking is very important, right? Because that board needs to understand that two things. One is that the employees are being paid at market, and just understand what market is, because as we all know right now, having resources and labor is one of the most challenging things. So if you're underpaying because your budget does not allow it, then that is a fundraising problem. That's not a peaceful people problem, and the board has to lead that effort. So that's a very important component there. The 990 is important for board engagement. Their names, that board's names are going on that document. They need to understand that document and make sure that they understand how it was put together, what it covers, and all those kind of things. Conflict of interest and whistleblower policies are very important, because there has to be a mechanism in place for any organization, for someone, if they see something they don't think is above the board have a way to report that. And so you got to make sure those are in place. This last one, or not last one, second to last one, about a finance subcommittee is really important because, typically in most boards, I suspect you guys it's a handful of people and you have a treasurer, and that's great. But you want to make sure that treasurer is engaged, but it's good to have another member with that treasurer so that there is a finance committee that can work on finance things outside of the board, because so many times you don't want to waste board time with something that should be handled just on a finance level. So it's important to have that in place. And it's also very important that whoever that is in the board, that they're connected to the person that's doing the work. We encourage all of our customers to make sure the treasurers have direct lines to us. That gives that treasurer the ability, or that finance committee, to, if they have questions, they don't have to bother the executive director, but also it provides us kind of as an independent party that they know that they're getting kind of the source of truth from. So that's an important connection to make sure. And, and lastly is just to make sure that there's a process in place, that there's time taken to compile an annual report, that you're providing guidance, not only of what you did last year, but what your plans are next year, and you're spending that time wrapping up the thing. And I know many of you guys I don't have time for that. And I understand that, but it is very important, not only internally, but externally, that you can provide an annual report out to any constituents you may have. So, those are very high level things, but all are very key points. And Alyssa has a very involved board and a very involved finance committee. So I thought she could share just a few words on how they achieve that and what their process is like.
Yes. So 50% of our board serves on our finance committee, and we have a finance chair who is very involved. He's not in the back counting pencils, but he is, supporting me in our financial statements. Really, that came out of a need on surviving COVID and making sure we had enough cash in the bank and keeping people paid and still being able to perform our services. So our finance committee does produce monthly financials that we send out to the board and we review at board meetings. We actually had a finance committee meeting this morning. This is our packet of information here. We put together an analysis based on the financials for that month. So the rest of our board can kind of at a glance read why something might be over budget or under budget, or what's going on with the restricted accounts. And then we have a series of financial documents that we send out, like our income statement, budget to actuals, year to date actuals, the budget, all good things that are nice in a package. The board does meet when we have major changes, like the cash to accrual. We just had a training session for the full board so that they could understand our transition and how things are going to be reported now. We meet regularly for our budget process. So I work on the budget and then first get it approved by the finance committee, and then it gets presented to the full board. We have several reviews of our 990, which we're working on right now. So it is really important to have people on your side to help with this process. And I will say that they know a lot more than I do when it comes to financials. So they catch things on reports that I didn't and help me understand, what we have going on financially for our business looking forward, and traditionally, what was it like previously? So they're worth their weight in gold, I will say that.
So Alyssa, just a follow-up question. How did you cultivate that group? Because
good question.
I mean, they're very engaged and very good. And
thank you. We were involved with Seed 20, and then we're invited to be an SVP investee And so with that comes a mentor. So for about 2 years prior to joining the board, we had a mentor just providing support, and he happened to be a retired banker. He officially joined the board a couple years ago, and then we have a cycle of board of directors. So we knew that his term was going to be coming to a close next year. So then we try to find someone in the community that could kind of follow under his wings. So we have a deep bench of those interested financials. You know, Charlotte's a banking town. There are a large number of people here who do have that sort of background. And that is what they can contribute to the organization. But there's a lot of ways of finding people, and I'd be happy to share more. But Arts and Science Council has a board cultivation program. Getting hooked up with SVP is great. And a lot of the times it's really just skills-based volunteers before they even go through the board process. So Junior League of Charlotte has a get on board training program. So, you know, there's a lot of options out there to start meeting people and building your social capital so you can invite people to be on your board with that expertise.
And then the board, you know, can play lots of roles. Like I said, the fundraising is huge and important. And Beth, in your situation, you know, you have board involvement as well. And like we're engaged with your board, and they have to approve payments, right? So how is your board functioning for you in that respect?
Yeah, so one of the hardest parts about being a small staff organization where you don't have enough people on staff to kind of do that, the separation of duties, that's a best practice, I think, in financial management, is to have a board member help to be one of those people that helps approve transactions. So it's not like before, you know, it might be me approving a transaction and then paying it, and then maybe even reimbursing myself for something, which, you know, is maybe not the best thing to have done regularly. So we had started kind of using our treasurer to sort of act as that staff person before we, you know, started fully outsourcing, but now they still approve. So Attolero would, I'll send over the invoices for payment twice a month, and then Attolero puts everything together and schedules it as need be, and then sends it to my treasurer, who then reviews it quickly and approves it. So it's really helped us kind of have that best practice of separating duties so that, you know, everything's not on one person.
That's great. I mean, controls are a very important part of all this, right? And you know, you've got to make sure the financial person, it's for their protection as well. So even if you have an in-house person, like in Beth's situations, not that there would ever be any malfeasance or anything like that, but it's just the optics of it, right? That someone sees, you know, if someone came in and said, oh, wait a minute, not only did she make the expense, you reimburse her for the expense. You just have to use those kind of checks and balances, and board members can play that role for you. If you're not using them, make sure you engage your board members to increase your control structure, because it's better for everyone.
Hey, Robert, I wanted to chime in really quick because there's been, first of all, this is about to make me cry, all this wonderful knowledge sharing between all of you. I mean, this is what this is all about. So this is fantastic. I know everyone's getting a lot out of it. But to Kenneth's question, I know other people had it, is, you know, your Share Charlotte profile is the best place to say, we need a CPA on our board, or we need X, Y, and Z in our board. So then we can go promote that. And Share Charlotte's going to make an intentional, you know, we're going to start promoting more skill-based opportunities on a Thursday Share newsletter that goes out to 30,000 members of the Share, you know, of Charlotteans. And so those skill-based needs you have, just put them in there. I'll give a shout out to Mr. McNeely on the phone here, who, you know, needed a board member to help. And she found the opportunity through the Share Charlotte site. And I think he has a fabulous board member in Civil A. But I think that's a success story of how it can work when you have those needs. That's what your profile is there for. So anyway, just a quick plug, and we will be promoting your skill-based needs too through our Thursday newsletters and all our social. So
also, don't forget that you can share your the opportunities you have posted on your profile on your social media as well. And if you tag us, then we can share that too.
Good stuff. All good stuff. Okay. Well, if there's no questions on boards, we will move on to an even more exciting topic, 990s. And this is the topic that most of our customers scream running from because it usually results in a significant pain point for them. First off is if you're not aware of what the types of forms you file, the very smallest, the newest nonprofits, the 990N. This is very easy. You don't need any help for this. You can do that online. It's just basically signing a representation. And then the next level of complexity is a 990EZ. It's much smaller than a full 990, but you need to be gross receipts under 200,000 and then assets under 500,000. If you're above those, then you have to do a full 990. The other things out there is if you are taking any unrelated business income, and that's kind of a whole topic on its own that we won't get to go into here, but it's anything that is outside of your program delivery. If you are renting out space to a for-profit business, right, that's unrelated business income, and you have to declare that. But again, that's another topic that you would use a 990T for. And then if you're a private foundation, there's a little different form there that doesn't have as much public disclosure because you're a private foundation. So those are kind of the types of 990s and the situations you would use each of those on. But what I really want to spend time on is, thinking about a 990 as a fundraising tool. Most people think of it as a compliance exercise, but it's more than that, because most of the time when people first find out about your organization, many grantors and significant contributors go pull your 990. They can Google the IRS, they can go Charity Navigator, whatever it may be, and do that. But it's not only them, board members. When you have a board member that is evaluating what you do, and if they want to join this, they're going to pull your 990 and they're going to take a look at that, or we encourage them to do that, right? Creditors, banks are going to use that 990. If you're trying to sign up vendors, they're trying to use that 990 as well. And then you just have other organizations out there that are doing nonprofit benchmarking, that since this is all public information, they can really do a very quick profile on you just by your 990. And then that becomes an entry way to other people to your organization. Charity Navigator is an example. They can go in and evaluate you. They pull almost all the information from the 990 and then can create a profile. So, with that in mind, this is probably the most important document you guys do every year. And what we find is it's the one our customers care about the least, right? Because it's a compliance exercise. So we really try to make sure that 990 represents who you are and it represents what the program is. And so I just want to spend some time talking about how we do that and how you should do that with whoever you're working with to prepare your 990.
Hey, Robert, I have a quick question.
Mm-hmm.
This is Shay Hunt. Your previous slide, two previous now, you talked about one of the requirements being the 990 is required if the gross receipts are greater than 200K and the assets are greater than 200K. Is it safe, and forgive my ignorance, but is it safe to say that your gross receipts are your assets? So
no. So gross receipts, think of gross receipts as the amount of funding you'd received in the year that's being reported. Okay. So if you received 50,000 running your program and 100,000 in contributions, your gross receipt would be $150,000. Your assets is really what that, when we talk about the statement of financial position, it's that net assets. So it's what your equity or your value is. So that would be, for a cash-based nonprofit, it's roughly the cash you have in the bank.
Okay. And both need to be, so it needs to be gross receipts. Well, I guess both would be, never mind.
Yeah.
Thank you.
Yeah. So it's not an and or, it's an and. So.
Thank you.
Okay. Yep. But good question there. So anyway, these are the stakeholders that are seeing your 990, whether you realize that or not. And so how do you tell your story through a 990, and how do you get involved? And not to have the forms, as you know, are very government, IRS, and not very friendly, but still there's some key information that's pulled in your organizations by outsourced services. And one of the most important things is in part one, it asks for your mission. And, you know, we've taken over some customers where it's very nondescript and they just have a sentence there, but you really need to flesh out here is what we're here to do. Here's what we're here to serve. And then, but it has to be concise, but it has to be important. It needs to be engaging. It's not like you need to have your marketing person write it, but you should have someone that has a marketing plan and someone that really can speak to all those constituents and not just a nondescript one-liner. And then as you get deeper into it, there's where it talks about what your program service accomplishments are. So it's kind of the next step from what you put in the summary. It's the next level detail of what you do. So let's say that you are, you know, you're serving, you know, underprivileged kids with providing meals. You want to say how many times you're doing that a week, what your impact was across all your program. And then in part three, you want to get very descriptive for each program type. Someone talked about they had many programs. The 990 gives you the ability to talk about each of those programs, and you want to be very specific there because that's going to attract donors. And it's going to attract grantors based on what they're passionate about. So, you know, make sure there's alignment there, and you need to spend the time working with your accountant to make sure that the document represents those things and they can see it. So this is, I bolded these because this is where the narrative, this is where we tell the story. This is where if someone comes to their 990, they should be able to walk away with saying, I understand what they do and I want to support it. That's what you want them to do. And again, keep in mind, everybody's pulling this 990. These other areas that are not bolded, we've already talked about, or at least we've talked about these. And we just, you know, you want alignment between your financials and your 990s. Many times I've seen customers that are onboarded with us where I look at their financials and I look at their 990s, they don't even tell the same story. So you've got to make sure that this story is in your financials, and all the 990 is a logical extension or a different way to give that message. And this is the same topics we've talked about before. Schedule A is important because what a Schedule A does is it tells what % of your income comes from the public. And okay, you're like, okay, well, why does that matter? It matters because if this ratio gets too low, you could lose your nonprofit status, right? So you want to make sure that the general public is at least kicking in, I think 33% over a 5-year period is what you want to make sure. And then you also have to understand what they mean by general public. And it's kind of complex there, but basically, if anyone funds more than 2% of your operating, and this is a non-foundation, this is a person or corporation, then that's not considered public support. And so it can get very complex there if you have a large corporate donor or a large individual donor and you are a 501c3. You have to monitor that and keep up with that, and people are interested in that. And this is the one thing of all that the IRS cares about. The IRS, do they really care about this? No, the IRS cares about this. What is your public support ratio? Because if it gets too low, you're not behaving like a public charity, you're behaving like a private foundation. And that would be the repercussions, is they would want to reclassify you as a private foundation, which is, there's nothing wrong with that, but it's just the way that you're reporting and going to market. Schedule B, you know, there's a list of your key donors. So the IRS cares about this too, because they want to make sure that this Schedule A is supported by who your key donors are, and that that there's uniformity there. So those are another very important area. And the last thing is something that also, there's a Schedule O. And in this Schedule O, you can put a note about anything you want to put a note about. So if there's something unusual about your operations, there's something that warrants further explanations, put it there. You know, work with your CPA. If you went through, you know, some financial, I guess a hiccup might be the wrong word, but there's a financial blip that needs to be addressed, put it there. If there's an exposure, put it there. You know, it never hurts on Schedule O to tell the reader more. So, but so many times this Schedule O goes unused, and that's fine too if there's no more story to tell. But just want to make you aware that there is opportunities to tell more of your story if it's needed and warranted. All right. Any questions on that?
Actually, Kenneth had a question. Did you get that answered earlier, Kenneth, or?
I did. She jumped in and answered.
Awesome.
It was just pertaining to the board, and everybody has jumped in and offered the help that we need, because you know our board is like, that's my cousin, that's my friend, right? That's because you know you have to have a board to do it when you're first getting started. So you just kind of get whoever you can get that's willing to put their name down, and now it's more important. So I've reached out for some help and.
Oh, good. Okay, cool.
All right, so that's high level 990, and you know, but the other thing about 990s that I didn't really have to talk about, but your preparer, you know, make sure whoever does it does have some experience with nonprofits, whether it be your CPA or your treasurer on your board or your next door neighbor. It is important that they understand how to use this 990 to tell a story, and it's not just a compliance. So just to make sure you're disciplined with that and find the right preparer. All right, so the next thing we want to spend a little bit of time on was this whole audit compilation, reviews, and just attestation engagements. And I have attestation. It looked like that was misspelled, but I checked it many times. It still looks misspelled to me. But anyway, I want to talk about when and why and how you do these kind of things. For most small nonprofits, which I think probably 50% in the call fall in this category, it's really not necessary. As long as you know you can produce functional management reporting that you know is consumable and usable by the board to run your organization, you don't really need an external assessment of those things. Again, as long as you know you have reliable, good financial data. But as you grow, as you get grant opportunities, as you may get involved with doing government contracts, at some point someone's going to ask for an attestation engagement. An attestation engagement is basically where a CPA will come in and perform one of these reports for you, an independent CPA. Attolero does not do attestation engagements. And the reason why is CPAs are regulated on a state level and each have their own compliance. And we do business in about 18 states, and we do not have, this is not something that we have the ability to manage and grow and make sure we meet all the requirements in 18 states. So we made a strategic decision to contribute what we're good at. What we're good at is impactful bookkeeping, accounting, payroll services, management reporting, all those things that we are not good, and nor do we want to do this type of work. And also, if we're doing those things that we're good at, it really impairs our independence to deliver on these items. So what are each? A compilation is basically an outside CPA will come in, look at your books, make sure it's in a right format. They don't do any testing. They're not assuring it. They're just saying, hey, these are the books, and based on the numbers given to me, this is the way they should be presented. based on generally accepted accounting principles. When is that good? That's going to be good for people when your books are being prepared internally. So if your ED is also your bookkeeper and accountant, somebody may say, hey, I want to see somebody else make sure these financials are right and that they're presented the right way. So that's where that's going to come into play. And again, earlier I had this range, and these ranges aren't consistent. There are groups out there that use external services like us that are in north of 500,000 in annual fees, and they have none of these services. But this is just a general guidance that I found for the range of budgets based on this. So I'd spend less time looking at this and just worrying more about what it's for. A review is the next step in the process. So there's actually some analytical stuff, and there's some assurance that, hey, we looked at the numbers make sense based on what we understand about the organization and how they operate. And we've compiled them in such a way that it's generally accepted. So obviously a little more time, a little more assurance, a little more cost. And then lastly is the thing we all know, an audit. That's where they come in, do the controls testing. They take sample size of processes and tie back to source documentations. They provide audit reports to the board, and it's the highest level of assurance that you could have. And of course, it's the most expensive. And really, the important thing to keep in mind here is, do you need these things, right? Because so many times our customers will call us and say, hey, we just got a grant, but they say we have to have an audit. And Beth shared that story right at the beginning. It's not always the case. Sometimes, but just asking the question and you say, hey, I don't have an audit, I don't have a review, I don't have a compliance, but I have an external third party maintains my books, and that third party is a CPA. They say, okay, that's fine. Send us your internal financials or your management report and your 990, and that may be enough. So that's very, very important to ask that question. Don't be afraid to ask that question, because just because audit's there, it's not always what they mean. And that can save you obviously lots of time and lots of money if you don't have to have that step. The first thing I skipped over getting to that was, is it a requirement? So there are states, 8 states out there require audits at certain revenue thresholds. North Carolina is not one of those. So not an issue here, but there are other states out there that do require it at certain thresholds. So you got to make sure that you don't have a compliance requirement. The other thing is, if you're doing governmental type work or services or providing anything that's a government-based grant, then there is going to be an audit required almost always. So when you're soliciting grants, keep that in mind as a cost, right? So you want to make sure, okay, I know I'm going after this grant, I know I have to have an audit. Does it make sense to get this $20,000 grant and pay $10,000 for an audit? And sometimes the answer is going to be no. The $20,000 is great, but half of it's going away right away, so it might not be the best approach. And then when you're thinking about type, if, what do I do? I mean, is there ways to have, I can get away with, instead of a full audit, just compilations and reviews, because those are going to be cheaper and more simple. And, one thing is, am I having this review because my board feels like there's an internal control risk and they're trying to make sure that they've had an outside person verify that everything looks good? So there's a couple ways to do that. One, you can pay someone to come in once a year and do that. The other way may be that you hire an external firm to do your bookkeeping, right? And that's not a plug for us, that's a plug for anyone, but that's another way to mitigate the need to do a review and compliance earlier, is that the risk, the internal control risks are gone because somebody else is doing your bookkeeping. The other thing to do, and we have a lot of churches do this. I don't think anybody on here is a church, but instead of having a full audit, they basically have limited scope engagements. So their financial processes aren't that complex, but they do need somebody to come in and say, hey, we want you to, audit the offering, twice a year, right? To make sure that the money that they say reported is actually showing up. So you can define with a CPA certain limited scope engagements that aren't a full audit, but it might meet the criteria you need to solve your situation. So just, don't default to a full audit if there's a limited scope engagement that may accomplish what you need to do. And then another thing that's a cost and time saving that lots of nonprofits that have an audit requirement do is they go back to whoever's requiring the audit and they say, hey, can we do an audit like every third year? And that's a way too that maybe you have a cycle where there's a review, audit, review, audit. That's still more expensive than just having a review, but it's less expensive than having 3 audits. So that's an alternative that lots of grantors sometimes will agree to. All right, any attest questions popping up, or is that just terribly too exciting for everyone?
I don't see any questions.
Okay. Alyssa, Beth, you both guys are just ready to start first time audits. You want to share any perspective on what's forcing you down that path or why you're going down that path?
Yeah, for us, it's, our budget has grown a lot in the last couple years, and we kind of found ourselves suddenly to that threshold where more funders were asking for audits, and you can get away with not having them for a while with some like a compilation review or things like that were discussed, but it's to the point now where to kind of have that legitimacy and trust, we have to get an audit. And it's also just good to know that somebody is checking to make sure that we're doing everything we're supposed to do from, not just from the financial aspect, but looking for, all of our paperwork. Are we keeping track of how we do grants and what we say we're doing? Are we following those processes and procedures? So it's kind of that extra, you don't know what you don't know until somebody tells you. So we're kind of going through that now where we're finding out, oh, I should have been doing this, and now I'll do this going forward.
Yeah, and that's a great, I'm sorry, Alyssa, but before you jump in, is the other thing that you get as a tangible output of an audit is normally they help you put a set and process of controls in place. If you don't have it, then that's part of the audit, is that now you have a control structure and control processes, at least from the financial side.
Yeah, I was just going to say that we're in a similar situation as Rebuilding Together. Our budget size has grown a lot, and we feel that it's the right time as we start seeking larger investments, and also to formulate and know what we don't know, like how best shared. I do want to share that Robert is absolutely spot on, that some people say you need an audit or an independent review and you don't. And I have shared statements of activities that my accountant has provided. I've uploaded those to portals, even though it asks for an audit. I've sent them directly an email, and I haven't received pushback ever, largely because our budget size was not 500,000 until 2020. So it just go through with the grants and use what you have until someone says no.
No, that's really good guidance. It really is, because we have a lot of customers that will just say that audit and say, I'm not applying. And that's not necessarily the case.
Not at all.
Okay, so the last topic we wanted to spend some time on is, okay, if I care about my financials and I care about my 990, what are some things that I can do to make sure these things are right, and what kind of processes in place can I have to help pull this all together in a way? So this is a high level list, but it is, the 7 or 8 most important things that we recommend you have in process or in place, so all those things come out. And here, the first one is one where a lot of you guys may roll your eyes and say, I don't have time to do that because I'm doing other things. But, get things done as it happens, right? It's kind of like the tax preparers that talk about the guys that show up with a shoebox of receipts and need their tax return done in a few days. That's hard to do, and certainly a fundraiser or somebody trying to provide you funds does not want to wait on that. So have a practice, have a discipline, have someone in place, whether it's a volunteer, your spouse, your next door neighbor, whoever it is, that somebody is keeping over your financials and the transactions as they happen. And that involves, making sure that at the end of each month, there's a reconciliation to your bank statement, that if you have receivables, who owes you money. If you have payables, who do you owe? Just making sure at each month end you have a statement, a financial position you can look at and point to and say, this is who I am as of July 31st, 2021. That's very important discipline to have in place. And to make sure those things happen, we really encourage our customers to have a very disciplined financial reporting and closing process. Pick a day. Doesn't have to be the 5th or the 10th. It can be the 20th, whatever it may be, but just make sure by every month you get that done. Does it happen 100% of the time? Probably not. But it's the whole thing about what's the quote? We pursue perfection, but in pursuit of perfection, you receive excellence. It's the same thing, or you achieve excellence. It's the same thing with your financials. Have a target, make sure it happens, and at least then you're watching it. We haven't talked about budgets a lot, but it is an important step that you take the time to create a budget. Kenneth has been blessed with a tremendous change, probably what he anticipated this year in his budget, and that's fine. But you want to know going into each year, this is what I expect to receive. This is what I'm going to try to raise. And if I, assuming I get that, this is what I can do with it. And then if you have a surprise, you reassess the budget and you redo the budget, but you need to have some benchmark in place. And this is the point you get your board aligned. You get the board to say, hey, we're here because we believe your cause. We believe this is what it takes to run the organization. And, we're going to work with you to raise those funds. And everyone's aligned on the financials. But the budget, I can't tell you is how important that is. And the second part of the budget is you don't just budget to what you need, you budget to build a reserve. Too many nonprofits are stuck in this perpetual cycle of just trying to stay alive. And, all it takes is something like COVID or something way less than that, impactful that can wipe you out. So we encourage all of our customers to build that reserve. And it really based on how the contributions or the program revenues come to your organization about how big that kitty should be or that reserve should be. But we're looking for our customers to build 3 to 6 months to a year, if they can do it, of operating funding as reserves. So when you look at their total unrestricted net assets that we talked about in the financial position, that should cover some percentage of months that you can run your organization without any cash coming in. So the only way you do that is to start building that reserve in your budget. And you say, okay, we're putting 10% to build this reserve, and it may take you 3 to 4 years to do it, but at least you're disciplined, you're tracking, and you're doing it. Making sure that board meeting is happening, and in each board meeting, you talk about financials. If you're having quarterly meetings, you make sure that you provide those financials to your board prior to that meeting, so the questions could be answered and not just presented to them at that time. And then I'd really encourage you, if you're not meeting monthly with the board, at least send them a monthly financial update. I know that's something that Alyssa alluded to that her board does, is the finance committee publishes an update every month. Now, everyone may not have a finance committee to do that, but what you can do is pull a set of financials and forward it to the board and say, here's where you are. Even if you don't have time to explain it, just get the information out there, and then it'll evolve over time. The next bullet point is all about telling the story. Again, you've got to make sure the chart of accounts represents, you have GL accounts that represent what you do, and you can code activity there and then track activity there to do that. And that you're allocating these to the functional areas we talked about earlier. That's key. If you're doing those things, it makes everything easier. People can understand your program through your financials. People understand how the restricted, unrestricted funds run through. They can see complete visibility to how to do that. It makes budgeting easier. It makes people dissecting your financials easier. And then lastly, it makes filing your 990 a lot easier. If you're doing that every month, your 990 should be filed by the due date. Our rule is we file all 990s before the due date. Does it always happen? No, but we certainly aspire to do that. And I will say, I was very impressed that I think 60 or 70% of these organizations file their 990 by the due date. That's not what we see normally from people as they on board with us. So you guys are doing a good job of that. So I could have been preaching to the choir in the 990 area, but again, it's very important because, again, the outside world, the 990s with the outside world seeing, what you don't want to have happen is somebody goes to GuideStar or Charity Navigator and the last 990 posted was 3 years ago. You know, you want to see the most current one posted there that's telling the story of your organization. Beth, Alyssa, any financial processes along these lines or other ones you guys may have put in place that really helped you to optimize financial reporting? And I'm putting you on the spot a little bit there, but if you guys both do fantastic jobs of it, so I thought I'd at least give you the chance to share.
One of the things that we really try to get a handle on is managing our project costs. So like each house we work on, we code that so that we can see how much we've actually spent on that house. Because a lot of our grants are for like a specific number of homes to repair. So that really has helped us keep better track of, you know, how are we doing with making our dollars go furthest for those projects.
And that's a great example because it talks to the level of specificity and how granular you can go with your financial reporting. And again, that's, you know, the way Beth does it is they use a field in the accounting system, QuickBooks, to do that. Or you can do it in the chart of accounts. But when you have a lot of sites, you can find add-on fields, and most accounting systems can accommodate that. But just so you have some tagging at the lowest level possible, so when you run reports, you can see it and do it that way.
Awesome. Hey, Robert, Eileen had a question about IRS processing delays. Are you seeing anything with that?
Hey, that's the IRS is very behind right now. You think about that organization, and none of us have a lot of pity for them, I understand, but you think of what they've been through in the last 18 months with the how PPP's treated and, you know, all the CARES Act kind of things. The ERTC is consuming them right now, the employee retention tax credit, because all these people are filing 941Xs, and so they are way behind. We do a lot of employee retention tax credit work, and I know this isn't specific to 990s, but I'm just giving you a sense. And typically, when you file an amended 941, you would get results with that usually within a quarter. We're seeing timeframes of 6-9 months out before we're getting any kind of response to 941Xs, which are they're going to process those quicker than they do a 990. So they just have a huge resource issue right now, and it's going to be very backed up for foreseeable future.
We're at time, but Eileen, did you have any follow-up from that, or did that answer?
That answers the question. It is frustrating because then, as you say, donors or anyone goes out to the website and they're like, what, you know,
Yeah, and what
2019 and the 2020, and they're not processed yet. So
what we're having our customers do is make sure your website has the 990 on it. I know that doesn't help you with the services, but at least there's a place that people can point to and see it. So that's what we encourage our customers to do.
Awesome. Robert, did you have anything else, or are we?
That is
Did we get it all?
I think we got it all
like
through.
Perfect.
Yeah,
Right to the minute.
exactly.
Oh my
right.
goodness.
But I guess the last,
Beth,
the last
Yeah, go
thing
ahead.
is, just the last slide here is, thanks to Share Sharp for putting this together. Thanks to you guys taking the time. We talked about a lot of topics, and I say this with all sincerity. I don't care where you get the help, but get the help from somewhere. If you need us, send us an email. We can help at attolero.com. That'll get routed based on what your question is to the right person. We'll follow up with you. It may be me, it may be somebody else, but certainly we can help you in these areas. But again, make sure you get help and address these things, whether it's through us or anyone else.
Hey, Robert, I have a quick question. Is anyone on your staff available for after hour meetings?
Oh yeah, we work after hours. We work all the time. Who was giving me a hard time about
Yes.
sending them an email at 12:30 at night or something?
They work all the time.
Yeah.
Okay,
we
perfect.
definitely do. We understand how nonprofits work, and that's kind of the way we work as well.
Okay, perfect. Thank you. Thank you for it's great.
Yeah, and I would encourage anyone who's just thinking about it, wanting to get an idea of the cost, the process, just schedule time with Robert. He's so easy, and someone on his team will really help you just start the process and just get your head around it. Just so you know, I mean, you don't know until you ask. So
Yeah,
highly recommend
sure.
reaching out.
And then I also want to make sure the board, right? The board's there, guys. So if you don't want to have a conversation, we watch the board. And if people post questions, accounting questions or things like that, we'll jump in and provide a response. And that's the Facebook shared nonprofit board I'm talking about.
Amazing. So helpful, Robert. Thank you for putting this together and your time. And I feel like we, all the boards probably represented too, would be so nice for them to hear from Robert, right? Just the expertise and how important it is. Yeah.
Okay, guys. Well, thanks a lot.
Thank you. All right. Y'all have a great weekend, and we'll recap with the deck and the recording. And y'all got Robert's email there. So have a great weekend.
Hey, Julie.
All right.
Yeah.
How soon do you think the recording will come out?
Let's see. Sarah.
It always goes out in shareholder updates. So I think we put out one this Monday. So I believe it would be the following Monday.
Okay. All right. Thank you so much. Thank you guys so much. We appreciate it.
Okay. Bye, Shay.
Bye.
Alyssa and Beth, thank you so much for sharing. It was awesome.
You're welcome.
Have a good weekend.